All right, this is the confidential briefing for December 6th. Look, the whole point of this is to cut right through all the noise in the market, connect the dots that matter, and get you ready for what is absolutely the single most important event of the year. And it's just a few days away. So let's get straight into it. I want you to burn this sentence into your mind for the next 72 hours. Seriously, everything you are seeing right now, all the panic in the headlines, the fear all over social media, it's a deliberate operation. They are shaking you out. Do not let them. So let's define the battlefield, okay? What we're witnessing right now is a classic, institutionally driven shakeout. It is designed to do one thing and one thing only, to get you to sell your assets at the absolute worst possible time. Okay, let's just look at the carnage. I mean, the numbers here paint a very clear picture. In the crypto markets, you had Bitcoin flash crash all the way down to $86,000. And in an instant, boom, $400 million in leverage long positions were just liquidated, wiped out. At the exact same time, you look at the traditional markets, the S&P 500 is down 4% this week alone. This tells you that whole soft landing narrative the media was pushing, it's officially dead. This is not random panic, folks. It's coordinated, broad-based selling. So who is the main driver behind all this chaos? Well, it's not really human traders just panicking. It's the algo bots. These are automated trading systems, right? They scan headlines and react in milliseconds. They see a word like recession, they see jobs loss, and they just execute massive sell orders. They have no nuance, they have no context, no foresight. All they have is code, and that code is being exploited. And this right here illustrates the two-sided game that's being played. The retail investor, they see the crash and they panic sell out of pure fear. But what's the institutional smart money doing? Oh, they're selling too, but for a totally different reason. They are selling to intentionally trigger the stop losses of retail traders, pushing the price down even further. And then, at that point of maximum pain, what do? They turn right around and they start buying. They are buying your bags right before the entire narrative is about to change. And that brings us to the core thesis of this whole briefing, and it's probably the single most important concept you need to grasp today. In this specific environment, bad news is profoundly good news. The market is getting this completely 100% wrong. This is the number that broke the market. The November ADP jobs report came in at negative 32,000. This is the first negative print we've seen since the pandemic. The algos saw this number and they immediately priced in a deep, long recession. But they completely missed the second order effect. And that's the central question, right? How can the first negative jobs report in years possibly be a bullish signal for assets? I mean, it seems completely counterintuitive, which is exactly why so many people are getting flushed out right now. They just can't see the next move on the chessboard. The answer is actually in this simple two-step logic, which the algos are completely missing. So, step one, the minus 32,000 jobs number, that isn't a prediction of a recession. It's a confirmation that it's already here. The soft landing idea is officially off the table. Then, step two, this confirmation has completely cornered the Federal Reserve. They no longer have a choice. A collapsing labor market forces them to pivot and cut interest rates immediately. The bad news forces the good news. This logic brings us directly to the Federal Reserve's upcoming meeting. So let's go inside their war room, because what happens in that room on December 9th and 10th, it's going to dictate the direction of all markets for the next 6 months. And I am not exaggerating when I say this is the most dangerous, high-stakes meeting of Jerome Powell's entire career. He is completely trapped. If he fails to cut rates, he risks a systemic market collapse. If he cuts too aggressively, he risks reigniting inflation. His entire legacy is going to be defined in the next few days. Now, you have to understand, the FOMC isn't one unified group. Right now, it's a committee at war with itself. On the left, you've got the hawks, guys like Atlanta Fed President Raphael Bostic. They're staring at inflation numbers that are still sticky above 3%, and they are terrified of repeating the 1970s stagflation crisis. For them, cutting rates now would be like pouring gasoline on a fire. Their mandate is to hold rates steady, no matter what the short-term pain is. But then on the right, you have the doves, like Boston Fed President Susan Collins. They are looking at that negative 32,000 jobs number, and they're seeing the beginning of a catastrophic labor market collapse. Their fear is unemployment spiking to 6% by next quarter, which could trigger a really deep recession. So they are demanding an immediate rate cut to stop the bleeding. Powell's job is to somehow find a consensus between these two warring factions. But here's the thing. While the Fed is in there debating, the market has already cast its vote. According to the CME FedWatch tool, which tracks the futures pricing, there is an 87% probability of a 25 basis point cut. The market isn't asking for a cut, it's demanding it. And Powell knows that if he defies this expectation and holds rates steady, the S&P 500 could gap down another 10% overnight. He simply cannot afford that kind of catastrophic shock to the system. He's been checkmated by the data. So how is he going to do it without looking like he's panicking? He's going to use this specific language. He'll call it an insurance cut. This is very carefully chosen rhetoric, a classic tool of Fed communication. It lets him frame the pivot not as a reaction to a crisis, but as a proactive, preventative measure to support the dual mandate, specifically the labor market. But make no mistake about it, it is a clear admission that the economy is weak and it requires stimulus. This is the green light the market has been waiting for. Okay, now adding fuel to this fire is a whole secondary crisis, a contagion narrative that's centered around one company, MicroStrategy, or MSTR. The fear here is being used as a weapon to drag down the entire crypto market. We really need to dissect this carefully. It is absolutely critical to separate fact from FUD. That's fear, uncertainty, and doubt. Okay, there is one legitimate manageable risk here, and that is the potential for MicroStrategy to be excluded from the MSCI World Index in January. This is a huge global stock index, and a lot of passive ETFs are required to hold the stocks within it. So if MSTR gets removed, those funds would be forced to sell their shares, which creates downward pressure. It's a real headline risk, but it's manageable. But then there is the manufactured fear, the outright lie, which is the so-called margin call miss. Let me be unequivocally clear about this. The margin call narrative is false. It's a deliberately spread rumor designed to create panic. The claim is that a big drop in Bitcoin's price would force Michael Saylor to liquidate his company's Bitcoin holdings to cover some debt. A simple look at their balance sheet proves this is impossible. MicroStrategy's debt is primarily structured as long-term, unsecured convertible notes. This is nothing like a traditional margin loan. There is no collateral trigger price for Bitcoin that would force a sale. That debt isn't due for years. Even with Bitcoin at $80,000 or $70 or $60, their position is structurally secure. This has nothing to do with solvency. It is a pure sentiment attack. This is textbook FUD in action. This entire margin call story has been engineered by sophisticated players to create maximum fear. Their goal is to drive down the price of not just MSTR, but Bitcoin and the entire crypto asset class. And the timing? It's not a coincidence. Why do it now? So they can accumulate assets at a steep discount right before the Fed pivot we just discussed flips the entire market bullish. They are creating their own sale, and your job is not to give it to them. So let's bring all of these threads together. You've got the jobs data, the Fed's trap, the MicroStrategy FUD. It's all building towards a single moment in time, the pivot. You see, the extreme fear that you feel in a market right now, that is the opportunity. This period of maximum uncertainty right now between the crash and the Fed's announcement, this is the window. But believe me, it is closing fast. Once that cut is officially announced, this brief period of dislocation will be over. Here is the critical sequence of events for the next few days. It starts today, December 6th, with the market crash and this widespread panic. This is going to continue until Monday, December 9th, when the FOMC gets together for its two-day meeting. Inside that room, they'll debate, they'll argue, but like we've discussed, the jobs data has already forced their hand, which leads to the climax. Mark your calendars, Tuesday, December 10th at 2 p.m. Eastern Time. That is when the FOMC statement will be released. That's followed by Jerome Powell's press conference at 2:30. This is not just another Fed meeting. Given the context of the jobs data and all the market carnage, this is the moment the liquidity taps are turned back on. That is the moment the entire market narrative for the first half of 2025 is written. At that moment, everything changes. Which brings me to my final and most important point. This is your mission. This is your sole directive for the next 3 days. Your only job is to survive the next 72 hours with your positions intact. Do not panic sell. The volatility between now and Tuesday afternoon is going to be extreme. They will try one last time to shake you out. This is the final test, and under no circumstances should you be using leverage right now. That is a guaranteed way to get liquidated in this environment. Survive, and you win. That's the briefing. Stay disciplined.